There was a lot of action in my picks and plays this week as I added to some positions and took profits in others. Artificial intelligence is still rallying high, so it's time for profits. But elsewhere, it was time to add to positions. Like, is cannabis dead? Let's take a look at the winners, losers, and the moves that I made in my portfolios this week. Is the metaverse back from the dead? This week, Roblox was the winner with a gain of 12.3%. At the end of April, Roblox's monthly report of users was actually negative, and it caused the stock to sell off really hard. However, when earnings came out this week, it turns out Roblox isn't as bad as it thought. So it gained over 12%, and it was this week's winner. Is cannabis finally dead? More importantly, what the hell is going on with Canopy Growth? Canopy Growth hit an all-new low this week, dropping 21.64% and not finding a bottom until $1.02 a share. Analyst reports came out and showed that Canopy's revenue forecasts were much too optimistic, and there's a lot more worry for this stock going forward, which caused Canopy Growth to lose the week, and cannabis fell as a whole sector. Artificial intelligence is the watchword for every successful company, as Palantir demonstrated, reporting in its earnings that its artificial intelligence offerings are taking off, and as a result, Palantir rocketed 28.21% this week. Not only does it look like Palantir Technologies is on the road to finally being profitable, it's seeing a lot more customer interest in its artificial intelligence offerings. And since artificial intelligence is the big craze right now, Palantir saw a huge jump and was this week's winner. Gold got slammed this week when China started seeing weakened demand, which means copper sells off, which means silver and gold sells off. So the precious metals started to roll over. As a result, the miners get hit even harder. And out of those miners, the super speculative ones like Golden Minerals, my ultra speculative penny stock play, get hit particularly hard. And Golden Minerals dropped 15.14% this week on the back of gold selling off. And as long as gold remains in a downtrend, we can expect more selling in all of the gold miners, silver miners, and anything that has anything to do with precious metals or even copper and other industrial metals. Is cannabis dead? And what should we do with Canopy Growth? I decided to make my final buy in Canopy Growth this week when it tested all new lows, with a buy that went through on Friday the 12th at $1.03. This buy lowered my per share cost 9.09% from $4.40 to $4. And as I said, this will be my last buy. At this point, it's hard to know whether or not Canopy could go bankrupt, so I've locked in the maximum amount I'm willing to lose. Everyone's strategy to taking losses should be different. Mine is that if I believe in the company and I think the thesis will pay off, I would rather ride it to zero than do what I've done in the past and sell at a loss and miss a huge rally. However, I need to protect my downside, so the maximum I have to lose is what's left in Canopy Growth, and it's only about 1% of my entire portfolio. From here, my next sell target is $4.47, slightly below the high Canopy saw in December of 2022 when everyone thought the safe banking bill would pass. And at this point, it's hard to know what's going to happen next for cannabis. This is one that you just hold on for the long term and watch what happens. Is it time to start putting money back into real estate investment trusts? This week I added to my Crown Castle play. Crown Castle is a 5G wireless tower REIT, and it gives a really good dividend, but this week it actually sold off below its low from the pandemic bottom in March of 2020. My next buy went through on May 8th at $116.02, and this locked in 20.35% in discounts on shares that I'd sold for $145.66 back on December 13th of last year. The buy lowered my per share cost 1.35% from $136.79 down to $134.95. And from here, my next buy is the next level of support, right around $98.70. And my next sell target is $151.93, just under the high that Crown Castle saw in its rally last year. Has Dutch Bros lost that buzzy feeling? Well, this week when they reported earnings, analysts felt like it was growing too fast, and they're not focused enough on profitability. So Dutch Bros really sold off. I actually made two buys this week, the first on the 10th at $29.90, and the second on May 11th at $27.50. The combined buys gave me an average buying price of $28.70. They lowered my per share cost 2.25% from $35.50 down to $34.70. And from here, my next buy target is $24.72, right around a point of support that Dutch Bros saw last year. My next sell target is $40.30, a bit under Dutch Bros' highs from 2023. This is one of those long-term plays. Since I live in the Pacific Northwest, I believe in the thesis of Dutch Bros, and I think it's going to come back from here, so I will keep adding to it on lower lows. Is it time to give up on gold once more? Well, when the gold price rolled over on the back of Chinese weakness, all the gold miners got hit particularly hard, with those junior high-spec gold miners getting hit the worst. My super speculative, ultra-dangerous play is Golden Minerals, with the ticker symbol AUMN, and I added more to the stock this week at 19.69 cents a share on May 11th. This buy lowered my per share cost 9.59%, down from 0.3097 cents to 28 cents even. And from here, my next buy target is one gamers out there might find interesting, 0.1337, which also stands for elite. My next sell target is 28 cents even, right about where Golden Minerals bounced in the last couple of months, and that is my cost basis. If Golden Minerals makes it up to that point, I will pull some of the capital I've added in, just to be on the safe side and risk manage this unbelievably speculative position. Is it time to give up on ride-sharing plays like Lyft? When the new CEO reported earnings this week, he announced that he wasn't working on profitability. In fact, he's going to continue rolling even more money into growth. And this just terrified all the investors and caused Lyft to sell off. Since Lyft is one of my speculative investments, I decided to buy near its lows at $8.25 on Friday, May 12th. This buy locked in 21.05% in a discount on shares that I just sold a few weeks ago at $10.45, right when it was rallying into earnings. My buy lowered my per share cost 3.17% from $9.45 to $9.15. And from here, my next buy target is $6.90, a price calculated using the Fibonacci method. And my next sell target is at $11.10, just under a point of resistance Lyft saw right before it reported earnings. And I believe it'll see that same resistance if it gets up to that price again. Is the artificial intelligence bubble about to burst? This week, I took more profits in Nvidia at $290.20 on Monday the 8th, as it continued to be the biggest position in my portfolio and outgrew the allocation target. The sale locked in 1,751.95% in gains on shares that I bought when I originally opened the position back on September 6th of 2016 at $15.67. The sale lowered my per share cost $19.06, down from $55.69 to $74.75. A negative per share cost means that I've taken all the capital out of the position in addition to $74.75 per share of the shares that I still hold in my portfolio. From here, my next buy target is $199.13, above a level of support Nvidia has seen repeatedly in the past. And my next sell target is $323.17, just under a level of resistance that Nvidia has seen in the past, and at a point where this portfolio position will once again have outgrown the target allocation size and need to be reduced. Is the artificial intelligence hype starting to hit its peak? Maybe. Palantir Technologies reported this week and relied a lot on artificial intelligence to drive up its sales. And it was a good earnings report, causing Palantir to pop significantly. I decided to take profits on May 10th at $9.88. And this sale locked in 61.17% in gains on shares that I bought for $6.13 back when Palantir saw that weird price action on January 24th. Since this sale is significantly under my per share cost, it ended up raising my per share cost 3.44% from $16 a share to $16.55 a share. However, for me, this is a form of risk management. When I have over 60% in gains on shares that I bought, in a stock that is as volatile as Palantir Technologies, it's important to lock in gains. From here, my next buy target is a point of support down at $7.55. And my next sell target is at $17.05. above my new per share cost. Are cloud companies starting to die? Well, Twilio reported earnings this week, and it looks like it is losing customers. It didn't earn nearly as much revenue as it was expecting, as a lot of its smaller customers are pulling back on its offerings. However, I believe in the long-term thesis behind Twilio, so I added more on May 12th at $45.85. This buy locked in a 61.57% discount on shares that I sold for $119.32 back on January 21st of 2020. Additionally, it lowered my per share cost 5.19%. Down from $95.35 to $90.40. At this point, Twilio is reaching its lows from 2022, so I'm going to make a series of small buys instead of one large buy. My next buy target is at a point of support at $44.20. If Twilio bounces from here, I will take profits at its recent high at $79.60. Even though that's below my per share cost, risk management says if I make that kind of gain, I need to take something off the table. To learn more about long-term investing and to follow along in all the individual trades in all of my portfolios, you can check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help me out, and I'll see you in the next video.